Thank you very much for joining us on this live chat. It's a freewheeling conversation, and the idea is to make it very, very simple so you understand how Budget 2023 impacts your money, your finances, your take-home salary, and more. And we've got a full house. We have tax experts to help us make sense of this old regime, new regime, default regime. And of course, Swarup Mohanty joins in to give us the wealth perspective and how does my investment planning change. And of course, we have two ladies in the house, Parizad Sirwalla from KPMG and Surabhi Marwah from EY India, to help us make sense of all the tax announcements that we have heard. So thank you so much. Thanks to all of you for staying back through the evening to take the questions. And they've been coming in thick and fast. I have to, get the big elephant out of the room. I think the one question that's been flooding all our timelines today is, should I move to the new regime or should I stay in the old? So I'll start off with the ladies on the tax front, personal income tax. Surabhi, why don't you take that one first?
Sure. So, Surabhi, and what a lovely name you have.
You too.
So, it's very specific to a person's exemptions and deductions. But in all the maths that we did, and I think Parizad would agree, what we've seen is that if your deductions and exemptions are about 4,25,000 and more, if you earn more than 15 lakh rupees, then the old regime may still be beneficial to you, because remember, in the new regime, you're only getting the standard deduction. You're still not getting ATC, ATD, the medical, PPFs, etc. Of course, above 5 crores, because of the reduced rate of surcharge and the maximum rate becoming 39% as against 42.7, the new regime may still be beneficial. So in a nutshell, while you can look at your income at different brackets, 7 lakhs, 10 lakhs, 20 lakhs, what we've seen is if your deductions like HRA plus exemptions like the 150 under 86, etc., are about 4,25,000 or more, then the older regime may be beneficial. And if they are lesser than that, then as you progress, the new regime will be more beneficial to you.
And this is for someone earning 15 lakhs, taxable income of 15 lakhs.
Correct,
that's
correct.
when the math kicks in, right?
And the math kicks in because of the various rates,
the reductions,
and the rebate that they've given, 87A rebate, which was 5 lakhs earlier and now 7 lakhs. But that's really what the major math is coming out to. So everyone needs to go back and check their exemptions.
Yeah. So viewers, just to sort of simplify before we take it to Parizad, what we're doing is we're taking an example. Assuming that your taxable income today is 15 lakhs, remember in the old regime, the 30% tax kicks in immediately after 10 lakhs. Now here it kicks in after 15 lakhs. So we are taking 15 lakhs as an example, as an illustration here. Parizad, so, what's your number coming to? How much deduction should I be enjoying for me to remain in the old regime? When it'll still make sense, let me say, to remain in the old regime.
So I completely echo what Surabhi just articulated, because it actually, for every individual, there are a couple of variables that you need to see. You have to assess your own individual position. It's a function of your income. Also, it's a function of what deductions you are used to claiming. So if I just and Surabhi mentioned 4,25,000, which includes the standard deduction of 50,000. Considering that the standard deduction of 50,000 is now neutralized because you now have it in the new
in both regimes,
budget, new scheme, if I might. So it's a little confusing at first brush, old regime, existing new regime, and now a proposed amended new regime. If I just put it the other way and I neutralize the standard deduction, and as Surabhi said, the other popular, let's assume HRA, interest on housing loan, and various other deductions that you're used to claiming. My workings, rough and ready, if your taxable income is in the range of 8 to 15 lakhs, if you're in that category, and your deductions excluding standard deduction of 50,000 is to the tune of around 1,87,500 to 3.75 lakhs or more, then the old regime is still beneficial to you if you're in that bracket of income with this kind of deductions or more.
Okay.
If you're in 15 lakhs to the 5 crore bracket of income, then as Surabhi said, there is a max. I've just sort of removed the standard deduction out of the equation. So in Surabhi's example, it was 4.25. So that's correct. In 3.75, excluding standard deduction in that income bracket. If more than that, then again, your old regime is beneficial. But if you're really a high net worth individual and you're above 5 crores of income, as an example, then by virtue of the surcharge dropping from 37 to 25%, definitely the new regime is better. For so the supremely high income earners, let's say foreign nationals working in India who do not avail deductions, clearly it's very clear for them maybe the proposed amended new regime is definitely better. But for existing taxpayers, as is already articulated, it's a function of your income bracket along with a function of the deductions that you are claiming. Because what is really taken out of the equation from a deduction perspective in this budget which is announced today is standard deduction. That is one important change. And the other is, as you mentioned, that the surcharge rate has dropped, for income earners about 5. So, these things are important to be considered.
I think, thank you both. These are some great references to have, some ballpark calculations so people can start thinking along these lines. And for the benefit of whoever's tuning in, I'll just repeat, this is the most important takeaway on personal income tax, as Parizad mentioned. If you are in the 8 to 15 lakh income bracket, taxable income, then look at all your deductions. Forget standard deduction because that's common across both the regime. Look at the other deductions that you're getting under ATC, ATD, your HRA. If the deductions are up to 3.75, 1.87 to 3.75, above 3.75, it will start making sense in terms of staying in the old regime. If it is less than that, if you're not earning so many deductions, then you may want to switch to the new regime. Parizad, I just want to clarify. ATC, we know, straight away 1.5 lakhs. Mediclaim is simple to sort of tabulate. For the purpose of this illustration, how much HRA have you sort of taken on board? Just so that we know that people paying rent of, roughly this amount should keep that in mind.
Surabhi, I don't have the exact amount right now. It's just a rough and ready.
Let me come in. I think it should be about 10% of the CTC is what we generally take. That's what we would have generally taken, since Parizad and my numbers match, roughly around that much.
Okay, great. I think that really puts us in a good space where we can start thinking about totaling up all of our deductions and exemptions. Swarup, now that we understand this, the question is, will there really be more money left in the hands of people? That was the big ask in the budget, right? More money to either spend or maybe even to invest. What's your takeaway?
See, I feel from a personal tax and savings and investment perspective, this is a landmark budget. There's this great saying that, a good footballer is where the ball is, but a great footballer is where the ball will be. And when you look at this budget, it's a clear signal that the new regime is the default regime going forward. So it signals to the country, and especially to the young of the country who will pay tax for a long time from here on, from a regime of tax rebates, you should prepare for a regime of tax payment.
So instead of clamoring for increasing ATC limit every year, increasing ATD limit, be prepared to, maybe give up on these deductions.
Yeah, so I'm sticking my neck out on this one and saying that in the next 4 or 5 years, you will see more development on the new regime than on the old regime. Right? It will become simplified and you pay your tax and you go home. When you pay your tax, of course, I think one big thing that has happened is the reduction of surcharge for the high net worth. That will leave a lot of money on the table. Now, when you have money on the table, the government will want you to spend it because that is the boost for consumption.
Somewhere I feel, I don't know, is this really fair? The high earners, the super rich, for them the math is so simple. You just have to shift.
No, but here also,
it's straight away. The surcharge reduction is, freeing up a lot of money if you're moving to the new regime.
But Surabhi,
I still have to calculate, going by Surabhi and Parizad's sort of basic blueprint.
But here also they made it simple. No, if you're 7 lakhs, then you also get something from 5 lakhs to 7 lakhs. So
at the bottom.
Both sides, the proper middle is still to be sorted.
The middle is always in the middle.
Yeah, absolutely. Somebody said that the middle class gets TV debates. But I think in the next 3-4 years, this is what will happen, and that's where what you do with the surplus becomes very important, and that's how you prudently, if you start prudently looking at money, This thing that started post demonetization of shifting from fixed assets to financial assets, which got cemented in post COVID, and now will go a step further post this budget, is my view.
Okay, quick take from the ladies before we move to the next theme. Do you think that this makes it lucrative enough to switch? I mean, the old regime, the concessional tax regime, when it was introduced, was almost a non-starter. Parizad, is it looking better now?
Yes, definitely. And as Swarup said, I think the intention, the stated intent of the government is very clear. I mean, even 2 years back when it was announced, it was very clear that you, like the corporate tax regime, the thrust is to move to an absolute flat individual tax structure with lower tax rates, more slabs, and, absolutely deduction-free or exemption-free mechanisms. So keeping that intent in mind, of course, the new regime in the earlier avatar was not having takers, and we had statistics that hardly 5 lakh people availed it over the last 2 years. So to take that agenda ahead, definitely the changes are in the right direction, and it is looking more attractive from that perspective.
Okay. Surabhi, quick point. Do you concur?
Absolutely, and if I look at it from the young, youth was one of the 7 key drivers or key things that the FM spoke about. As a young person who's coming into the fold of income tax, my attitude is till 7 lakhs, I'm getting a rebate, so no tax to be paid. If I add standard deduction and I'm salaried, no tax till 7.5. And then I get into the fold, later on I pay tax with a smile, and it's lesser burdensome administratively as well. So I think that is a very, very good mechanism to start getting people into the fold and making it simpler as well.
Well, you put it that way, actually, it's really striking, right? Swarup, so new person getting into the work atmosphere, new earner, 7 lakh rupees, no tax. Do you think it's the YOLO concept and you spend it away, or do you think it will come back to mutual funds?
No, it will depend on people like you, on how you communicate with them, and I do believe you all play a very influential part in that. And this is the starting of investing in its truest form in India. And if I at that age would have invested 500 rupees per month, I would be financially free today. There was nobody telling me that. That's not an excuse to say, but that's the truth. But today there are enough people educating them, and if they just put aside a little part of their salary, maybe 20% to start with, and India is getting expensive as a country, so the retirement is a serious issue in India. If they can start a little bit of adding financial prudence, because the country is moving towards financial prudence, into their income, a lot can happen to them, and they have to be cognizant of this from here on, is what this budget is saying very clearly and loudly.
Yeah, I mean, that's a painful point, right? I wish I had started earlier.
Yeah.
A lot of people have that thought, including me. I mean, let me put it out there on national television. But let's quickly move on. There are lots of other aspects of this budget that we need to cover. The other development that kind of came into light was insurance, and that's probably the biggest debate when you're talking personal finance in budget 2023. So to quickly explain this to you in a simple fashion, what the budget is doing is that for insurance policies, non-ULIP and non-term, insurance policies that you will buy after the 1st of April 2023, if the total premium or the aggregate premium crosses 5 lakh rupees, then there is going to be a tax incidence. The money that you are making on these insurance policies, what the insurer is going to pay to you, will be taxable, which wasn't the case till now. But once again, ladies, we need more clarity on this, because there was a lot of confusion in the day whether it is across multiple policies, policies from one single insurer, single policy. So, Surabhi, you want to take this up first in terms of clarity?
I think it's not very, I mean, the bill and the memorandum speak about this, but we'll have to analyze in more detail. But what the key points are, ULIP is not covered because the ULIP was covered in 2021. Death benefit is not covered. So what is important is it should be a single policy, premium above 5 lakh rupees, policy taken after 1st of April 2023. And if it's not a death benefit, then it should be taxable. I don't think it's across multiple policies. I think it's qua each policy as you move along, and basically to track things like money back policies, etc. That's what the fine print seems to suggest.
Okay. Parizad, your interpretation?
I think I have a slightly different view, and as Surabhi said, it's open for debate, because even when this ULIP thing was introduced, from Feb 21, There was a circular, I think number 2, which was also introduced thereafter, clarifying, and there were various permutations and calculations, and the computation mechanism really becomes tough to interpret. But the way I have read it so far, and it's a very rough and ready read, I really feel it's the aggregate premium for one or more policy, which exceeds 5 lakhs and not really qua policy. And because they've said then it's the payout on maturity is proposed to be taxed as income from other sources. So if so I really feel it's the aggregate of the premiums and not qua policy. But
Okay.
yes, I know it's, open for interpretation. Of course, I do need to read the fine print carefully, but that's the prima facie view emerged.
Yeah.
And, while the computation mechanism is to be specified, Surabhi said proceeds on debt continues to be exempt. And, this impacts now all the other life insurance policies, particularly what I can think of are the endowment and the cashback policies. If I also read budget speech, again, the stated intent is that, you cannot benefit from insurance, particularly high value insurance. And so if you have, endowment policies which are really high on premium, then you will really have to factor in the tax aspects going forward.
Yeah.
Of course, it's possible.
Yeah, no,
but
I think that's really important to put it out there. The bottom line is, if you're watching this telecast, if you're watching this live on social media, and you happen to walk into your neighborhood bank tomorrow and someone sells you a new insurance, non-ULIP insurance product, non-term insurance product, hold on. You need tax clarity before you decide to buy it or not. Know your taxes, and then, of course, it's an individual's choice, but wait for the clarity to emerge, whether this is going to be applicable, as Parizad said, to one single policy, multiple policies put together. At what point will the income from these policies get taxed? So we need some more granular detail. Parizad, you're making a point?
No, I
was just saying that, the fine print has to be read threadbare on the computation mechanism, because even for the ULIP, when the circulars came, it really became very complicated.
Sure. Surabhi?
Yeah, I think what's also going to be important is, not one policy, but one insurer as well. So I'd say just watch this space, because once we read and once the computation mechanism comes out, it could be very different, because that's what happened in ULIP also. Third policy, second policy. But that's the end. The moral of the story is now they're going to be taxable. In what form and manner? We will,
we have to wait. Yeah, because even the insurers, at least today, there were so many different versions and interpretations doing the rounds. So I think everybody, including the industry itself, needs more clarity, and hopefully we will have that from North Block in the days to come. But Swarup, as Surabhi said, the bottom line is non-ULIP, non-term insurance is, from a tax point of view, is not being incentivized anymore. Good news for mutual funds?
No, you're missing out the fact that when it's moved from 5 to 7 lakhs, we're missing a fair amount of people who could have come to us on the LSS side also. So it's both sides. I personally believe, and it's a personal, so I'm not qualified and nor should I be speaking on insurance, but people should buy insurance for insurance.
Yeah.
And they should buy investment products from an investment manager.
Yeah.
So that sort of clarity starts coming in is also a fact.
See, I understand that because I'm not a genius. I believe in keeping things very simple. So protection is protection.
Correct.
Investment and wealth creation is that. But who's to say? Everybody has their own individual choices, and we have a flourishing industry that offers you both put together. So it's individual freedom and choice.
So we would also look at first-time investors to come in, because everybody wants instant gratification. We would look at the ELSS as the first choice. If you invest in this, you're getting a tax break. Now for those newcomers, that's a big segment which will go away from us is also a reality.
Exactly. I was just coming to that. So the fact that ATC is still not available, I mean, if it ever will be available, we don't know in the new tax regime. How much of a hit is that going to be? I mean, sort of, is there any talk? What's the talk you're hearing within your peer set?
Too early, because we'll have to see how many people, actually the bulk of the people who invest in ATC are still left behind. There is enough for them to be in the old regime. So we'll have to wait, and I would suspect, and I'm backing myself on this one, which is not good, in the next 2-3 years we'll see some impact coming in, because I suspect there'll be more modification out of this regime in the out of the space of tax breaks in the old regime than it was in the past.
Okay, two more quick points and then we'll start summing it all up. Foreign remittances under LRS, the liberalized remittance scheme, which basically allows you to remit up to $250,000 overseas. Now, the tax element on this scheme has gone up. So, Surabhi, you want to take it away and explain this to us? Is it going to become a big pinch? What happens to people who need to remit money overseas, let's say to their children, or some other sort of family emergencies, etc.?
So earlier, the rule in the last years when it was introduced was that if you are remitting LRS of more than 7 lakh rupees, there was a TCS of 5%. Now, this was TCS. You could adjust it against other tax when you are filing your return. Now, when you're sending money, the rate has gone up from 5 to 20%, and the limit of 7 lakh rupees no longer applies. It doesn't apply on overseas store packages and money that you send for normally outside under LRS, and a lot of rules had changed in August 22 as well. Money that you send for medical, etc., is still subject to the old rules. So there are everything hasn't changed. The 5% still applies to medical, etc. But if you're sending money for, like I said, overseas tour packages or otherwise for, say, investments overseas under permissible limits, then it's 20%, and this 7 lakh limit doesn't apply. And I think the reason is that in the last 2 years, the government has been very actively tracking LRS, very actively seeing what the money can do. And in the new ODI regulations that came in August last year, again, they said there were certain guidelines around what you can do with this LRS money and when you need to bring it back into India. So I think it's basically to monitor how much money is going out and what's being done with the money. And that's really what this change is all about.
Okay.
And in terms of, just to end, if even though this is a 20%, it's a TCS, it's a cash flow issue. You can take a credit when you're filing your return. So it's not really a loss of money, but it will definitely have a cash flow impact.
Okay, got that. So that's on remittances. Let's also cover housing quickly. Not too much, actually. Nothing changed. There was a lot of expectation on home loans. Nothing really happened. But there is one change, Parizad, which is capital gains that arise from the sale of property. So can you just quickly run us through the new norms?
Right. So actually, it depends. It can be quite a big change from a real estate transaction perspective. So there are currently 2 sections for long-term capital gains, which are popularly called as rollover tax relief. And when you're selling basically a house and investing in a house, so that's section 54, or when you're selling any other long-term capital asset and investing in another house. Both these are for long-term, availing relief under long-term capital gains. So under the first section 54, where you sell a house and invest in a house, you have to invest the capital gains. And under the second section 54F, where you're selling any other capital asset, investing in a house, you're supposed to invest the net sales proceeds. Under both these provisions, under the existing provisions of the law, there was really no cap or ceiling on the amount of, on the cost of the new property. So you could purchase any luxurious apartment or any value of the property. Now what they have said, and of course there were conditions, for the time period of purchasing the house before the sale happens or after the sale, depending on whether you were purchasing it outright or under construction. Now for both these sections, there is a cap of 10 crore for the new property. So beyond that, so if depending on the amount of your capital gains, while 10 crore as such looks like a big amount for the cost of the new property, but depending again on what income bracket and what situation you are in, the point is that there is a 10 crore limit. So in transaction of sale of shares, sometimes, when there are huge value transactions happening, under 54F, if you were to invest in a property, you were getting the exemption if you invest the net sales proceeds without any embargo on the cost of the new house, and you even deposit it into the capital gains account scheme. The point being that, now the cap is for 10 crores for the cost of the new property.
If you're making capital gains in excess of 10 crores, whether that is from property or whether that's from shares, the maximum amount that you can basically save by parking it in a real estate investment is 10 crores. Would that be a simple reading, Parizad?
Yes.
Okay.
Rough and ready, yes. Yeah.
Okay, got that. So, but as you're saying, perhaps it's something that obviously the high income earners, they have to think about a little more carefully and then plan things accordingly. So that pretty much kind of, takes us through all the major takeaways of the announcements. Let's get down to some final thoughts and final advice, really, as people go around, go about figuring out what they need to do with their income tax regime, their investments, etc. Swarup, so what would you say to people who are tuning in right now, who are listening right now? What should they be doing, let's say, in the next 2 to 3 weeks?
So I think the first realization is slowly but surely the onus of managing your money is shifting back to you. Take cognizance of that. From a capital market perspective, there are a lot of positives from this budget. I mean, we do see this as definitely a more fiscally prudent budget, and it will lead to easing of interest rates in the near future. I mean, that's our view, and our house view earlier was in an interest rising regime, there is no way equity can be re-rated. We probably towards the end of the year, we could see that as a trigger for equity re-rating happening. So, and add to the basic fact that this country is going from 3 trillion to 6 trillion, whatever people might say. So the only way this can come back to investors is through the capital markets. And if you're not invested, typically I always say that there is a risk to investing, there is a risk to not investing. The risk to not investing post this budget is significantly growing higher and higher.
Okay.
But you have to be very prudent about your money. You have been given 2 options. You can spend it or you can go about investing in yourself for your retirement. India will get expensive, no doubt or debate. We in Mumbai know how expensive India can get. So prepare for the future and look at money very prudently from here on is my only submission.
Some would argue at least the equity market seems to be giving several entry points over the last couple of weeks, but that's a debate for a different day, a different platform. Ladies, quickly, last thoughts with you as well. Parizad, what's your takeaway and what's your advice, more importantly, to people on the tax front and the personal finance front now?
Yeah, so I can only talk on taxes. That's me. I would agree to the point that, Swarup mentioned in the beginning of the conversation that I think, by default now is the new tax regime. So the more oriented we get towards that gradually. So while for this year nothing changes, but as we progress towards the next financial years, it was very clearly laid out in the speech as well that the new regime is going to be by default. So if I look at it from a salary taxpayer's perspective, generally what we are used to is telling our employers at the beginning of the year that, right now just take the declaration of the old tax regime at the time of my return, because I always had the option of changing it if I'm a salary taxpayer. I'll look at the new regime to see if it was more beneficial. I think we need to orient ourselves, to say that looks like the new regime is here to stay. And if I, so I need to just sort of get into that mindset. And like anything, debt and taxes are certain. So start
absolutely.
planning.
I think you said it. That line always sums it up, right?
Yes, it always sums it up.
Yeah.
And I think, because even for higher income earners, retirers have been taxed over the last couple of years. Insurance is now, it's best to sort of, we're looking at slabs which are now being tweaked with lower tax rates, but devoid of exemptions.
All right. Well, out of time on this live. Thank you very much to all of you for joining in and helping us simplify, demystify all the tax changes that have been announced today. Thank you, viewers, for joining us as well.